All right, almost forgot to start the recording, but yeah, if you are referring to the setup here with the sweep on liquidity, break a structure down, it's definitely a bit of a larger range, but I think it's a great trade regardless. And then let me mark that up and keep an eye on it. I personally don't have it, did not see that one, but let me mark that up and I'll keep an eye on it. I think overall it's a really good trade though too. I like the fair value gap right around the entry level. We just came up to fill that. And then you mentioned AJ. Where do I even? I don't think I have AJ on my watch list actually. Oh, it's way down here. That's why. You say you were in AJ or you have it pending? I would assume you're referring to the sell position here. It's definitely a bit of a ways away though. So yeah, that's definitely a bit of a larger range. It's got some distance on it, but you know, if we do end up seeing retracement, I think that's a pretty solid trade as well. It's just a bit of a larger range here. I'm gonna move my mic because it's in front of my screen. Yeah, I had a lot of trades this week actually that were similar to ones like that kind of ran. I had Euro JPY. Well, this was last week's trade or the week before. I believe it was like the 20 something. Yeah, 21st. And then I had this follow up setup on it where from this range high to this break a structure low. But as you can see, obviously price just continued. It never came back up there and it just kind of crawled its way back down. So no entry on that one. USD Chef was a loss that I took. So price very quickly came back down into the range. Missed the break even here by a little bit. And then we ran down to negative 2% on that stop loss there. And pretty similar with CAD Chef. I've had about 4 trade loss and then the Euro JPY win more lately. We'll end up going into, I mean, these will be all in the end half of my results anyways here, but we'll kind of dive into like each different setup here. We'll go into the journal, the data, and kind of look at that a little more closely. But I just want to go over more recent trades just so people can follow along. This one's nice though. I did not see this one, but I do like the setup overall. USD CAD was one I initially wasn't going to take, I mentioned, but because of the break of structure, but I figured, you know, no point in bitching out. If it had a few candle closes here, I was willing to take it. Chef JPY is another example similar to Euro JPY where I kind of at the beginning of the week had this set up here, but price didn't quite make its way back up and then continued running without me. So solid miss there, solid miss on Euro, and then I had pound US dollar loss, which is actually the one I sent earlier in chat today. I'll actually show that here too because I do think that is something important to cover. Was these two setups here. Looking completely identical. So this was the more recent one, I believe. I mix them up because they do look almost identical when you look at them from this perspective. But one was obviously a loser and one was a winner. And I just really wanted to send this to kind of dive back into that idea of probabilities because clearly these are the exact same setup, same break of structure, same range with fair value, 75% fib. The exact same thing occurred here. But as you can see on my chart, one of them was a winning position I took in October, and then the other one here was a losing position that I just took this week. So very identical setups. Essentially the same exact thing regarding the fair value gap that's here right before the break. Sweep on small consolidation on both of them. We have our range marked out, break of structure, internal lows. Like it is picture perfect identical setup. And I just really wanted to circle back to that, especially mentioning it in main chat, just because of the idea of probabilities and really trying to dial that in. But other than that, is there any other setup that you mentioned here? I don't think so, because AJ, we looked at UCAT. I'm already in that one as well. Oops, for school. But let's see. I have no other setups that I have pending at the moment, but we can kind of honestly most of it is kind of looking like this for me. Which this is highly avoidable price action in my opinion. A lot of people try to take trades in these. I just really like to avoid that if I see volume looking that way, especially something like this as well. Is there any pendings that you guys might have? This was a recent GJ loss I took. let's see, that was a break even there on pound chef. Not much else that I'm seeing. I did see some people take this trade. It just didn't have a quality enough break of structure for me. So I did sit that one out on Euro NZD. Don't see too many other orders. Yeah, a lot of this is just very, very gross price action. I did get some questions this week about December in general as a whole. I do trade December. I typically take the last, the weeks for the holidays, I take them off. Typically like Christmas Eve to New Year's Day. I'm not going to be trading just simply from the standpoint of it being a holiday. Some people I know have gotten good results within that time, but I am not a person who really cares to go and avoid December as a whole because people historically say it's bad. I actually was looking for my results from last year, 2023 December, because I do know they were great. I could not find it here, but all I know is last year, 2023 December, I had a 100% win rate over about 5 trades. So one of my longer winning streaks I've had. Um, and at the time, I did risk 1%, but it was a 15% account gain on my personal with those 5 wins, just about. So I don't discriminate against December. I know a lot of people do. They had plenty of questions about it for me. Um, but yeah, we can kind of dive into a lot more of these positions here. I guess we'll go one by one down the line. Um, we'll look at some of the data first here. I changed my value to 1 million to make it nice, simple, round numbers, and also avoid pocket watching. But we're looking at about 52% win rate overall. This does include my break evens, though. Keep that in mind. So it's skewed a little bit higher. Because of that, my break evens I offset for spread and commission when I do break even. So I typically do gain a little bit here and there, like 0.11, 0.14, 0.15. This is kind of based off the MT4 values. So it is going to be skewing my win rate up a little bit compared to what's called your realized win rate, which would be total wins minus break even over total losses. 21% gain though from about September to the end of November, so pretty solid there. Keep in mind I do risk 2% per trade on my personal account, and then about an RR of 12 total in the last few months here. And obviously I'll close out this journal with December. This was as far back as it let me backtrack. So I was actually looking through MT4 to get the values, but MT4 erases your data every month in the account history section. If someone knows how to change that, please let me know, because I had to sign into Forex.com to backtrack it, and I could only go 3 months there. So it is a bit of a pain, but I kind of wanted to just go through and put all of this data together because I did not have a place with all of it accumulated, and then all of the trade images as well. I went through and kind of found them through team trades or trading views. So we'll take a look at some of these, starting with AUD USD. Now, this was early September. For those of you that look at my YouTube channel, you'll see for the most part a lot of these trades I've done breakdowns on. Not, sometimes in cumulative videos where I have multiple in one video, but this one I do remember being on YouTube as well. So we'll take a look at this. Let's actually pull it to a new tab here. And then take a look here. So very, very simple, very standard. I have a consolidation area. I marked it as my liquidity here, and then a very impulsive move to sweep that liquidity, followed by the break of structure with a very high volume fair value gap. So everything was met perfectly for me here. Also, you can see it is a very bullish trend already. So that typically strengthens my trade ideas, but very, very quickly ran through and took an SL on that one. So that was the first trade of September I took, and then I had one more on that same day actually that concluded, and that was a winner here on pound AUD. So as you guys know, I really like the consolidation areas, and when those areas are pushed out and the liquidity is grabbed with a break of structure. And I also find that fair value gaps closer to my entry strengthens my trade positions very often as well. This one was a very close break even, I remember, on MT4, but obviously spread works in your favor here in a buy position. So I was able to get tapped in after we saw the break of structure and the liquidity grab, and I kind of had this bullish range here. And then I also had these equal highs at my target, which in my opinion strengthened the trade for me as well. So price worked its way back in very, very aggressively, tapped me in, and then very, very quickly ran to TP here, and it actually did set up another trade that we're going to look at. If you guys can see here, we had some more consolidation, swept this internal liquidity with these lows here, and then we broke structure higher again. So I actually did have, and with another fair value gap around entry, another order here that I expected price to come back into and then run the highs again. So we will go to the next one here. This is going to be Euro USD, and on September 10th here. So this one very similar as well. It was a reversal trade. I do prefer to take reversal trades in a lot of cases. I found that they work better for me. But once again, that fair value gap right near the entry as well is another great confluence for me. But we had a very impulsive sweep on liquidity, which is important. These two very, very strong candles, and then a very aggressive break of structure down. We had a fair value gap here and one here as well to show that higher volume. And then, of course, the break of structure down, price continued trailing a bit longer. So I did have to drag my fib level, continuing to drag it down. And then eventually price worked its way back in. A very aggressive and impulsive wick candle here right into my entry. It is part of the reason I got tapped into this. This was actually a news event. And when the news events occur, spread increases. And then if spread increases on your MT4, you're more likely to get tapped into sell positions. So this one was close, realistically speaking, but because it happened during a news event and spread widened for me, it actually gave me the tap in here, which was, very helpful on my part, of course, because then very, very quickly after, we ran this low and made a 6% gain on that one. So another thing too, I just want to draw some attention to, I guess, before we go into it. The majority of values on MT4, there is a bit of skew when it comes to things like commissions, spread, and slippage. So you'll see like almost none of my losses are directly 2%. There's always a little bit of spread or slippage that occurs. So instead of losing directly 2%, I lost 2.1 here. Instead of gaining directly 6%, I gained 5.9 here. That's just something to take into account. And you can kind of see that here where 12 RR total would typically net about 24% account gain if you're risking 2%. But you can see the actual cumulative net was 21%. So there was 3% in total lost to things like swap, slippage, spread, and all of the unavoidable variables when trading MT4. But we will take a look at USD CAD here now. So I do believe this one was a loser. I had a note section. I didn't go through it and include it here, but on this trade, I remember I held it for a bit too long. That was my one critique on this one, and it was because of this very, very low and slow consolidation. And typically speaking, for a trade like this, when it does break structure again and creates a new range, I would more likely than not delete it. I did not in this case. I held it, and I think holding it longer than I should have is obviously where I think there was room for improvement there. But overall, still a great position. I like the consolidation in these low volume areas, and then a very impulsive and strong wick and break. You guys probably hear me use the term impulsive and strong consistently, but the idea is in a wick, it takes a ton of volume and a ton of orders to create a wick candle like this, and especially a bullish candle like this. And at the end of the day, fundamentally, our goal with this trading plan is to just follow institutional involvement. So if you're seeing very aggressive and high volume, more likely than not, you're aligning yourself with institutional plays, or the institutional bias, wherever they may want to drive price towards. So that was something I saw very, very clear and impulsive. We got a strong break. I do think once I see volume start dying down like this, though, you typically want to avoid these trades because now to me, it's showing that institutions are no longer involved in the market on my side of it. So then what you can kind of see here is that when this next break of structure occurs, all we're seeing is very high and strong volume once again, sweeping liquidity here and liquidity here, taking all these orders and then very aggressively delivering that bearish. So once again, just keeping the underlying idea of volume in mind, we're essentially seeing a shift in the markets here from the sense of liquidity and break of structure. So once I see this next liquidity point grabbed and then a very aggressive move down, in most cases I should have been and would have been deleting this order. I held on to it though, and then of course, end up taking the -2 for that one as well. I think overall though it was a great trade. If price retraced from somewhere like here, I think it would have been a great position. I do think holding it too long and holding it through these low volume periods is not in my best interest. I've just found that through data. And then next we have a break even play here. So this is going to be pound AUD. And this is actually the trade I mentioned earlier in the video. So if you do look here, you can actually see that initial pound AUD trade that I took, where we had that consolidation period. We pushed out that liquidity in a bunch of equal lows, and then we had a break of structure here. So this is actually what's called Wyckoff, a Wyckoff accumulation of orders. But essentially, all that's happening is institutions will kind of let the market consolidate, build a lot of orders there, and a lot of liquidity resting here. And if they want to go and push price bullish, they need a lot of sellers to enter the market. Because obviously, if you want to buy $1 million worth of pound AUD, there needs to be $1 million worth of sell orders at the level you intend on buying. That's kind of what institutions will do, is allow liquidity to be built, sometimes called an inducement. But all of these equal lows really strengthen this range, and there's a lot of sell orders that are going to be in the market here. So then once the institutions drive price below that area and all the sell orders are triggered, there's now enough buy orders, or sorry, enough sell orders to fill their large scale buy orders in the market. That's where you're going to see these very large and strong bullish moves, creating breaks of structure. So we see a very similar scenario kind of go on here, where we have consolidation, price moves through it, and then once again a very bullish and strong move, creating another break of structure. So I let price kind of play out, definitely a little bit long term as well here. It took about an extra close to a half of a month just for price to work its way back in. We tapped in very aggressively, moved bullish above my break even line here, and then very, very low and slow movement back down to break even. So overall, net no capital on this trade, but was still a great position and followed that winning trade right before it as well. So I think it was a great setup. Next, we can go over Euro CAD here. So this is going to be another break even position. Which we'll take a look at here. So this one, a lot of people in the community took, and a lot of people got their soul crushed because price came right below that take profit line and then very, very aggressively shifted back bearish. This is one of the issues when trading within these ranges. You know, you can see we're kind of working within this general range high and range low, not really breaking higher, not really breaking lower. But as you can see, a sweep on liquidity from a consolidation area with a lot of equal lows resting in here. And then we break structure to the upside. We do run pretty far after that, but I was willing to still hold this order. And then price very aggressively works its way back down, tapping into that fair value gap entry and then very aggressively higher. So unfortunately, a very close TP here, but was another break even. So no harm, no foul. And then the other thing to keep in mind here about this position was similar to that Wyckoff we talked about before, where institutions may put something like equal lows in place, or they might have low and slow volume areas so that a lot of sell orders build up. And you can see very clearly price wicks that sell area, converts those orders into very strong buy power. And it's just kind of those little things that getting used to looking at the market from a liquidity standpoint will improve your data overall for sure. So one of the next setups here, this is going to be a pound NZD winner. We will take a look at this one. So this one was pretty clear for me. Although I will say I did not like the consolidation at first of this price action, but when I see a shallow reach above this area, once again grabbing a lot of liquidity at significant highs and lows in the market, and then a break of structure with this much impulsive and high volume movement, to me it was a pretty clear range to trade. So I took the high to the low, I draw my 75 fib, and then I just enter there, and price very, very aggressively and quickly moved lower. These are some of the examples I like because even though price was a little ugly and consolidating for me, the idea that we had this high, this one, and this one all in the same general area, it tells you that more likely than not, a lot of buy orders are in the market here, and price will eventually run through those areas and can then convert those buy stops into sell pressure. So, you know, just really trying to get an understanding. I understand it might sound more complicated than it needs to be, But when I do look at any chart, I'm kind of looking at it from this perspective of liquidity and volume at all times, and it does help, I guess, give you a better underlying uh, reasoning behind your trades as opposed to someone who might just follow price action blindly or follow a set of rules blindly. Really keeping that underlying notion of institutional involvement, high volume price, liquidity, all of these things are going to strengthen your positions. But overall, keeping in mind that the markets are simply moving from liquidity and you're just trying to get an understanding of where institutional involvement might be taking place and then capitalizing on that using a very simple and basic set of rules. So as you can see, like any other trade, I take a sweep on liquidity, an impulsive and strong break of structure. We could see, very, very high volume movement here with the two large candles and the fair value gap as well, showing that a break of structure, and then price works its way back into my entry level, and then we move lower. So that was a great trade in my opinion as well. And then we are going to move on to a loss here on pound CAD. So this is my last trade for September that I took. It was about a 2.4% loss here. So we'll take a look at this, and oops, that was the wrong one. Right here. So we can kind of explain it was definitely a bit of a smaller range here, which is why these aggressive and strong candles, when you're trading smaller ranges, can lead to heightened slippage. And for those of you that don't know what slippage is, it is when your stop loss does not trigger. Oops. I pull it up. Is when your stop loss does not trigger right away because of high volume movement. So even though my stop loss is worth 2% risk here, because price moves so quickly and aggressively through that area, my brokerage may not have had enough time to adapt, and then I end up losing about 2.4%, and my stop loss may have gotten triggered closer to this level compared to this level, which I intended. So that's essentially what slippage is. It's not the biggest deal on the 4-hour time frame, but for those of you that try to move lower and lower time frames, it's going to become an issue, and it can be very damaging to your trading account. I've seen slippage as bad as people risking 1% and losing 2.4%, over double what they intended to risk on one position, which is a huge, huge issue with lower time frames. That can maybe be a topic for another day. But just keep in mind, slippage is something that is more likely to happen on lower time frames and also during news events. But regardless, we have a consolidation area here. We have this liquidity low that's put in place. Once again, some movement through it, grabbing that liquidity and then breaking structure higher. So the same rules as always are followed. We have our fair value gap within the range as well. And then price just reaches above this high and very aggressively. I reach a -2 here, so not a bad trade in my opinion. Good continuation setup as well. So perfectly happy with that loss. Next, we have a pound chef winner here. So this was actually the start of October for me, and about a 5.84% gain. So take a look at this one. It reminds me of my pound NZD one that we actually just went over here, where you see a significant high in price action. Typically for me, what justifies a significant high is, did it break some form of like minor low, or obviously you can kind of eyeball it if you really want as well. It doesn't have to be too strict, but you can see the same thing here where we have a high in price action. Price reaches above that area just barely. Pretty ugly high here, I will say, but then we broke structure very aggressively. So when I see that, in my eyes, a grab on liquidity and then a break of structure in the other direction, it signifies that more likely than not, institutional involvement is now going to be on the bearish side, and then price worked its way back up and in. We tagged in here and then very quickly ran to that TP. This was definitely an ugly high for me, but the setup still followed within my rules. So that was not a bad win there, and then followed by a couple losers here that we will go over. So NZD CAD here is going to be another pretty clear setup in my opinion. Nothing wrong with this one. So low volume consolidation. Once again, we talk a lot about how this is where a lot of orders in the market will build up, and institutions of course need a lot of orders in the market so they can place their very large scale ones themselves. Some people, this is a very fundamental concept to understand, but some people don't follow these institutions in a market like the foreign exchange. There's about $7 trillion per day that moves throughout the foreign exchange market per day. And that was a trillion. So $7 trillion per day. And of course, you, myself, anybody in this server does not have that kind of capital. But when they go to place their large scale buy orders or sell orders in this market, they need to be placing them at areas where lots and lots of traders are pooled together. And you'll typically see this in support and resistance levels or consolidation levels. And the reason being is because, let's see if I can draw here. Take a snippet and then draw over this. But when price ranges in a level like this, where we have a bunch of equal lows and a bunch of equal highs, anybody within this period of time from the start of that consolidation to the end of that consolidation, let's call it, oops, what just happened there? But let's go back to here. So let's call it, within this week, maybe, roughly of time towards the end of September. In that last week of September, maybe week and a half, all orders in this market, NZD CAD, had to be placed within that level that we just drew out. They had to be below this point and above this point, meaning that a lot of people who bought the markets are going to have stop losses in orders below this area, and a lot of people who sold the markets are going to have stop losses in buy orders above this area. So when you see a grab on liquidity of a lot of those orders, the institutions now have enough of those sell orders in the market to place their large scale buy orders that we talked about. So this could be 100,000 different traders wanted to buy NZD CAD around the low of this consolidation or have their stop loss there. But this now gives the institutions that volume they need to convert those orders into that very strong buying price action. And that's kind of why you fundamentally see the markets reach below these points, and then drive price very heavily in the other direction. They're essentially taking the capital from the less informed traders and using that for their own needs, essentially, in the market. But then price works its way very quickly back down. Was a loss in that position as well, another great one for me. And then we'll take a look at one more here, which is going to be AUD CAD. So this is closing out the first week in October here. Almost an identical setup to what we just talked about. Once again, we're seeing this consolidation of low volume here, and then a very aggressive push through that low of the range. This is, once again, when I talked about all of the orders resting below the lows or highs of this consolidation. When they grab all of the liquidity of those lows, they can now afford to buy price very heavily from a liquidity standpoint, breaking structure, creating another nice trading range here. So perfectly fine for a loss for me. Follows all my rules, follows all the logic that we teach here, or smart money teaches, and has that fair value gap near entry as well, which strengthens the trade idea. So another loss there. So we are about halfway now through all the trades. I have about 28 total here. That was trade number 14. Let me check if I'm good on time. Should be 12:35. So we are going to go to NZD USD here, which is a break-even position. Very self-explanatory. Once again, we have a significant low in the market here where price kind of stayed within this range for a little while and then worked its way up. So for me, price is coming back and very aggressively grabbing all of this internal liquidity and all of the sell orders here to then very, very aggressively buy price action to create a break of structure. So the same rules as always are met. We have the sweep on liquidity. We have the aggressive break of structure. You take your low to your high and draw your fib at the 75 level. This is for simplicity reasons, as well as getting a fixed 3RR. Some people prefer to enter at like a demand zone, which is perfectly fine. You could take that last candle before the buy move. That's called a demand zone. And you could set your order there if you would like. You would have actually had a winning trade here, but it's obviously all boils down to that probability standpoint. And then we have our large fair value gap showing high volume. Price kind of crawled its way back down into that entry, tapped me in here, very aggressively ran to about that 2RR level, but then I go break even and price came back down and tapped me at break even. So no harm, no foul. Once again, I took the break even on the trade, no capital lost. And I do think price actually went and ran that high in the future as well. But once again, another good break even position for me. And now we are looking at pound chef. So this is going to be nearing the end of October now. It's odd, taking a while to load there. This one here, I personally, after I took it, was iffy on this one. Number one, because of the fair value gap, there was not really much volume within this position, as well as a very weak break of structure. So Of course, I did get lucky in this sense with the break even position, but I did not like this trade in the review as well. Typically, every month or every quarter, I'll go through my trades and review them. Um, and, as I've kind of gained experience with this strategy, I find a lot less trades in my journal that I look back on and say, I did not like this one. But this will be one of them. And I talked about USD CAD as well in September, was another one where, it was iffy on my part. But overall, the things that I didn't like about it was that fair value gap is very, very small. And as we've been talking about, your goal is to spot that heavy institutional involvement in the markets, large volume moves, because that shows a lot of capital is being invested. And in doing so, you're going to ensure you're on the proper side of the markets. We did not get that here. And then a break of structure as well. You typically want to see those strong, aggressive breaks of structure. Once again, kind of the opposite of what we got here. We got a few wicks above that high, barely, and then price worked its way back down. So not my best setup, but overall, I tapped in here, got lucky by reaching that break-even level before price continued to run lower. So not a bad trade, took no loss on it, managed to preserve my capital with that break-even rule, but still not my highest quality setup. You can actually kind of see there was a setup before here as well that I would consider myself missing, but kind of in the same boat where we have a significant low in the market here, where we grab that liquidity, we break structure higher, we have a fair value gap around the entry, and then you take your trade from the low to the high. So this would have tapped in and been a winning trade here. I did not spot that at the time. Kind of see price came back into about that 75 level and then ran TP, which would be at this high. So it was a nice setup. I didn't spot that one at the time. I don't know if other people took it or not. But let's keep going here. This is going to be a winner now on pound US dollar. So let's take a look at this one. This is actually the one that I sent earlier in chat today. And actually I talked about it earlier in the webinar when we compared those two setups that looked identical. That's going to be this setup here. And then let's actually go to a live one on my chart here, which is this. So both very, very identical setups in my opinion. The same exact thing occurred here. That's probably one of the most important things to identify is as long as my rules are met the exact same every time, I'm okay with some of these losses. I'm okay with break evens or how the trade turns out. The most important part is just making sure your rules are fundamentally met. So we have that consolidation area as always, a very aggressive and bullish move, grabbing liquidity, and then a very aggressive and bearish break of structure. So that creates the range that we're working within here from this from this high to this low. And then a fair value gap within the range, showing that high volume and aggressive break. And then price just very quickly worked its way back in, tapped me into my entry, and then ran TP very quickly after that as well. So pretty solid winning trade in my eyes. For those of you that take demand or supply, once again, this bullish blue candle here before the bearish move is your supply zone. So it almost perfectly lines up at that 75 level anyways. But I do think the 75 level from a mechanical standpoint is a little bit nicer in my eyes. It keeps my risk and reward fixed at 3. And it's also less discretionary. It's very, very simple to, from the high to the low of the range, mark it up and have your entry the same every time. But that was a solid trade overall. And I do want to compare it to the one I took today. I guess it just hit SL. Yeah, so that was today. But we had the high here to the low. Once again, we had that sweep on consolidation, the fair value gap before the break of structure. Everything was met here once again, almost the same exact trade we just looked at on the same exact pair. And then, of course, this one results in a loss. So really just breaking down the fundamental aspect of probability here, just trying to make that very loud and clear. And then we will take a look at NZD CAD. And you can kind of see the equity curve here as well. I just want to point that out because we are going to get to, I've heard some people upset about losses this week. I do want to mention I've taken about 4 losses this week as well. But, having a journal like this to really track your trades gives you the ability to look in hindsight. And when you really look at a cumulative of data compared to just this last little 4-trade losing streak here, this is what not only will give you confidence in your edge, but hopefully keep your psychology a little bit more stable. Because some people are really upset about 4 or 5 trade losing streaks they may have took this week. But if you had the ability to pan out and kind of look at it as a bigger picture, you're going to see realistically it doesn't matter. If I took a straight line and drew it from where I started to where I am now, it's very consistent and profitable. So there's no need to kind of stress about that 4 trade losing streak you might be on. You just have to understand probabilistically, I'm even more likely to take a winner in the next few trades just based on my data and my probability. Sorry, I got a message here. Just want to make sure there's no one in the call. It is not. So, where did I leave off? NZCAD we looked at. So, I lost where I left off here. Euro JPY, we did not look at that. I know I looked at pound US dollar last. So it's going to be NZD-CAD, actually it was. So this one here was another example of a trade where I did not like it. So I had this one that I didn't like. I had that USD-CAD one. And then I think it was pound chef maybe that I didn't like as well. And the reason being for this one is I feel, once again, I held it a bit too long for my preference. If I have the setup occur here, price comes very close to my entry, runs bullish, and then, consolidates, especially for about 2 weeks here. I tend to avoid these. I don't like to hold orders too long because I find them to be lower probability just based on my testing. And another very key thing that stood out to me once again was that very small fair value gap. The smaller the fair value gap like this, the worse I have found trades playing out. I typically like to see, I'll click on a random one here, these very high volume fair value areas, like this one as well. So I typically like to see a bit higher volume. Sorry, I'm getting a lot of messages and DMs right now. But I typically like to see those higher volume fair value gaps just to show that I have some institutional involvement or capital on my side. But once again, price worked its way back down very low and slow, tapped me in, got a little bit of bullish momentum here, and then inevitably ran that overall low in the markets. Not my best trade. I like to trade ranges and range-based positions. So with this liquidity and this break of structure occurring all the way over here, I don't want to be getting tapped into price all the way over here a month later. I just found that doesn't necessarily help from a probability standpoint. And then we have Euro JPY here, which we'll take a look at. We swept a significant point of liquidity in the market. Very, very aggressive and bearish break of structure here. Great fair volume on this one, for example. And then price worked its way back up and into my entry level here. Didn't quite reach break even, and then very aggressively ran to stop loss. So the break of structure here was good in my opinion. The range is a bit awkward because it's one large candle, perfectly fine by me. And then we have a great sweep on liquidity here, a very significant point in the markets. And then that very, very strong and aggressive bearish movement. So all that together makes it a great setup for me. I entered at that 75 as always, and then took the loss on that one as well. So we are now, I was going to say, so yet we should be on November 1st now with Euro JPY. So that was my first trade of November. And then for those of you that joined late, I did mention on my YouTube channel, the majority of these trades have a breakdown associated with them. So I think I coupled a lot of them up, but I think I went over like AU, GA, and EU all in one video, I believe. And I kind of do breakdowns similar there as well. But I just kind of wanted to give a bigger picture of some of the more cumulative data here that we can all look at. So pound US dollars is going to be a break even play. Oops, clicked on the wrong one. Right here. So this is right after that previous winner that we already went over. So price worked its way down. I had the break of structure, or sorry, the sweep on liquidity here of consolidation, the break of structure lower with a very aggressive movement here. And then price worked its way back up and in, tapped me in at the 75, hit my break even line here. This is a terrible drawing. I don't know why my TP is not at the low here. It should be, and the fib should definitely be stretched out a bit longer. It's a horrible drawing, but we got tapped in here, hit the break even level, and then very, very quickly hit break even. No harm, no foul. Once again, no capital lost, which is one of the reasons I do like the break even rule. I find that overall it's going to skew my win rate higher, and it's going to help me prevent taking unnecessary losses. Mathematically speaking, a winner is 3 times as important as a loser if you're trading 3 risk and reward like myself. So some people make the argument that if you miss out on 1 winner, it's worth saving 3 losers. I've mathematically found through my data that it is actually more profitable using break even than not. But obviously, if you do testing on your own, you might trade a little differently, see things a little differently. If you find that it is better to not use break even, of course, go that route as well. Whatever your data kind of suggests is better versus worse, I would highly recommend going with that option. But once again, another break even trade here, and then you'll actually see towards the end of this journal, we have another GU position, back to back to back GU positions, all of them with different outcomes and the same rules. First one was a winner, this one's a break even, and then the third one is the one I talked about today, which is the losing trade. So 3 setups, same pair, same trend, same time frame, and all 3 different outcomes occurred. So I'm just really trying to push home that the idea of probability there. NZD JPY. Verification. I don't know why I have to verify. This one was a bit ugly for me as well because the fair value gap. But I overall just liked it from the standpoint of breaking this overall high too. So it technically broke 2 highs in my eyes here. It broke this lower range one and then also this higher range with a sweep of liquidity here. And then a very bullish trend as well. So I had price action here. It took forever to get back down and into this position. It was a very close break even again as well. But of course, spread works in my favor in this situation. So we missed my break even and I got to take away with that 3RR gain there. But once again, sweep on liquidity. Small fair value gap here, not the best. But we did break structure and have a great bullish trend here. So I set the order and worked out in my favor in that case. Take a look at CAD JPY. A lot of people in the community got into this position as clean as can be, in my opinion. We have a bullish trend. We have a sweep on liquidity of a significant point in the market here, and then a break of structure with great high volume and a fair value gap. So this was a very, very clear one. I know a lot of people who did get into this one, but price worked its way back in, tapped that 75 level, and then very quickly ran to 3RR again. So many tabs open here, but I'm going to take a drink real quick because my voice is giving out. All right. Few more to go over here, and then we're just about ready to wrap it up. Hopefully before 1 o'clock. I don't want to drag it out here, but we have a losing position on AUD CAD. This one was counter trend. We went over one already, but this one here, price was working a little bit in a bearish trend here, and then we had a very aggressive and impulsive sweep on liquidity, followed by the break of structure. So I had these equal lows here. Price took it out, broke structure higher, so I did expect a bullish shift in the market here. Of course, we did not get one. Price worked its way back in, and then continued the bearish trend here overall. So that is a -2, -1 RR here, -2% for me. And then we have Euro JPY. So this one here is one of my more recent winners. Some people missed this one, and that is why they have about 5 losses in a row, I believe. But this one here, in my opinion, was pretty clear. So we'll go over it. I had the range that occurred here, the break of structure lower, and then price didn't quite break this low for me with a candle or any significance. I think if it had some fair value here too, it would have been more reasonable. I'll be honest with you, in most cases, when I do see another shift down like this, I would delete order, but it happened so quickly that I actually did not get to it in that case. So we barely broke the low, but price very quickly moved bullish and tapped me into entry. So I did get tapped into this one, and then a very aggressive and quick TP here. So it was a great trade overall, in my opinion. One of my more recent winners, coming off of a terrible, ugly volume range there on Euro JPY as well. Then we can kind of brush back over these 4 losers. I know we kind of talked about them on my charts before, but talk about them just based on the journal here. So first one is Pound JPY. So this was actually contrary to Andre's sell position on Pound JPY. He saw this consolidation and then this break of structure down and kind of traded the bearish range and actually took a TP here. So I saw the opposite direction, perfectly fine. Both followed the rules. So I saw a sweep of liquidity here, a very aggressive bullish move, fair value gap, and then the break of structure of this small high here. So I took the bullish position here, did not quite get that break even, and then price ran and continued that bearish trend. Kind of contrary to what Andre saw was this consolidation, the move through it, the breakdown, and then obviously keeping intact these bearish lower lows and lower highs. So he actually got to capitalize on a winner here, which is opposite of what I took, but still a great trade regardless. We have Pad Chef now. This one was an aggressive stop loss. I want to circle back to that idea of slippage. So instead of losing 2% here, I actually lost 2.4. I think on MT4 is closer to like 2.3 something, 3.9 or 3.7. But this was extra capital that I did not intend on losing. based on risk. So that's something to keep in mind when these very aggressive stop losses occur. So you could see price very aggressively move through my stop loss level. But we had, once again, some great rules followed here. We had a sweep on liquidity, a break of structure, the fair value gap. I stretched it out here in this case, and price just very, very heavily went bearish and took my stop loss here. So that is another loss on CAD Chef there. We have two more to go over here. It's going to be USD Chef. A lot of people were in this trade as well, I know. So we had a very clear range here. Some people asked about my liquidity here. Personally, when I see price move up like this and then this kind of low and slow corrective move, my opinion, we're just grabbing liquidity of this consolidation or internal. But also the fact that we were in a bullish trend, it was enough for me to go and want to take this as a bullish position. So I saw the break of structure, the fair value gap, my low to my high. Once again, I draw my fib. Missed that break even by a little bit, and then price ran lower, taking that -1 again. And then last but not least, another -1 here, which is the pound US dollar trade we went over. Very similar to those other two previous ones I took. So few things I do want to kind of wrap it up here. It's 12:54. But one of the few things I want to make very clear, we went over so many more losers than winners in this webinar. And I want to just make sure driving home the idea of probabilities here. Anything with red, of course, is a loser here. For those of you that didn't follow, anything that's blue is a winner. And then anything that has no color is a break even here. So we went over what might feel like a lot more losers in this webinar, but I want you to be able to take a step back and really look at the long-term cumulative data and see how that pans out. Because I promise you, in the moment, psychologically, it is a very tough game being able to withstand 4 losses and understand that, the next few winners can be right around the corner and make up for that. So, for example, I had 2 winners in a row here. I had 2 winners in a row here. And all of those is more than enough to go and make up for 4 losses in a row. So, I could be right around the corner from 2 more winners. That kind of skews that data and brings it back into that inevitable upward trend that we're seeing over the longer term period here. So that's just one thing I really, really want to drive home. Some people are so used to seeing more winners and losers on social media or with different mentors, whatever it might be, or even expecting more winners and losers just from a mental standpoint of comfortability. But really just understanding we went over so many more losers here, even a multitude of losers where I said, I didn't like the setup, wasn't a great setup. I'm not perfect either. I take some ugly setups here and there. But over the long term, you could see the profitable equity curve and see how it plays out, regardless of bad setups, regardless of human error, and regardless of the idea of more losses than winners. But that should be all for today's webinar, guys. I'm going to probably call it here. And as always, this will be posted in the live sessions channel. But that is going to be all. Thank you all for tuning in here, and see you guys next week.